I'll be going through with you Tesla stock. Just type in Tesla, click enter, and then you'll get this information. I'll just point out the name is Tesla Inc. and TSLA is the symbol. If I buy right now, I have to pay 228.22 US dollars for one stock. The market cap is in billions, so it means it's a big size firm. It isn't paying any dividend yield. I just want to point out that companies that don't pay dividend, companies that pay dividend, that means they're financially strong because after paying their creditors, loans, liabilities, they still have extra money left. That extra money they pay to shareholders as dividend. So it means they're financially very strong. This firm is not paying any dividend. It could be maybe they're not financially strong, or maybe they have extra money left at the end, but they choose to reinvest in their own firm because they want to expand further. So it could be many reasons. So you need to find out what's the reason. Let's go to when was this founded in 2003, and you can also go to Wikipedia and you can search this box founded in 2003, 16 years ago. Now I want to see what the employees think about this firm who work here. Let's copy this, paste it here. Indeed, reviews. Let's have a look. And I can see we have 2,200 reviews and it's 3.5 star. You can just read through the pros and cons yourself. Check out the photos, the jobs. They have listed the questions asked. I want to see the reviews in Glassdoor as well. And let's have a look, and I can see that we have 2,700 reviews and it's 3.3 star. Just read through the pros and cons yourself. Check out the jobs they have listed, the salaries they're paying, the interview questions, the benefits they're giving, the photos of the firm and everything. Now let's go to Justia Patents and see if it has any patents or not. Let's paste it here exactly from Google, and I can see that please look at applicant or assignee because these are people who have full rights of the patent. So it has patent in 2012, a lot of patents, and 2013 it has patents as well, 2012, 13, and so on. Go through the list yourself, it's a big list. The more patents a firm has, the more stronger it is in the market, the more difficult it is to beat them. And that's another one, 2013, 2016, which is a recent patents. Please look if a company has a recent patent as well in 2015, 16, 17, 18, because that means they're still innovating. 2016, a lot of patents in 2016. That's brilliant. Just go through the list yourself. Now let's see. Check out the key executives and their salaries in Yahoo Finance, which is a brilliant website for that. And don't worry about which one to click, because just click the one that you get from Google in for Nasdaq stock. So what I do is I just check from Google the stock price. This is the one I'm looking at, Nasdaq symbol, and click profile, and you can see the sector, industry, full-time employees, and there are five key executives, and three of their salaries have been shown. Two of their salaries have not been shown because it says not applicable. You need to search why it's not applicable, why it's not shown, because the more information we have about the salaries, the more transparency there is. Now let's go to macro trend, and I want to see the ratios: price ratio, price book ratio, and let's type in the symbol. Now I want to explain, if the price book ratio is less than 1, that means stock is cheap, it's discount and it's a sale. If it's more than 1, that means stock is expensive. The higher the number goes, the more expensive it gets. So be patient with this website because it takes time to load sometimes because it has a lot of data. So once it's loaded, it will make your life quite easy. Please let me know if you have any questions for me, or if you want me to explain something in more detail, or if I'm just going through very fast in the tutorial, or if you want me to make a tutorial about a particular stock you're researching on. Please let me know. Okay, I can see that price book ratio is 6.39, which means somebody who buys the stock right now will be paying 6 times, nearly 6 times more money to buy the stock. It's 6 times more expensive. I can see in 2015 June it's 47 times more expensive. Somebody who bought in 2015 June, they paid $268 to buy something that was $5 worth. They paid 47 times more money to buy this stock. Right now it's 6 times more expensive. So it's up to you to decide if you want to wait or like how you want to go about it. And I can see in 2012 it's 52 times more expensive, and 2010 it's September, it's 8 times more expensive. So somebody who bought that time, they paid $20 to buy something that was $2.3 worth. Right now it's 6.39 times more expensive. So let's go to other ratios, and I want to see the current ratio. If current ratio is less than 1, that means stock is risky, and because liabilities are more than assets. If current ratio is 1.5 or more than that, that means stock is safe. It has good margin of safety. So I'm looking for 1.5 or more than that for it to be brilliant. Let's have a look once it's loaded. Right now I'm looking for, yes, it's less than 1.5. That means stock is risky. Let's look, has it ever been below? Has it ever been 1.5 or more than that? It has been 1.5 or more than that for in 2014 and 13 for a while, but that's not plenty. But I can see that it has fluctuated, but we have data since 2010 up till now. It's consistently below 1.5 recently, so it's not a secure stock, it's a dangerous stock. Right now, let's have a look at debt equity ratio. I'm looking for zero point 0.5 or less than that for it to be brilliant. This ratio will tell me if the company is mainly operating on debt or equity. So let's have a look. Okay, right now it's more than zero point 0.5. It's a dangerous stock. Let's look at the previous one as well. Has it ever been zero point 0.5 or less than that? No, it has never. I guess no, yes, it has actually. I can see since 2010 September up till like it's fluctuating. Like once or twice it has been less than zero point 0.5, but since we have data since 2010 up till now, it has always been above zero point 0.5. So it's a very dangerous stock in terms of debt. It's operating a lot on debt compared to equity, which is not very good. Let's go to return on equity. I'm looking for 8% or more than that for it to be brilliant. Let's have a look. Okay, there's no information for return on equity on this macro trend website right now, so I won't be able to judge. But it tells me in June 2019 it's a minus return on equity, which is not what I'm looking for. I'm looking for 8% or more than that. So that's a recent one. So I don't have other information that I can analyze.